Good morning. Thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and benign global cues, much welcome. The inflation print in the US actually, uh, if you will, adding to the little bit of less negativity, if I can use that term. But let's get straight to the basics. So first, what the U.S. markets did, and while the Nasdaq may have come off a little bit or stayed flattish, the Dow and the S&P had a reasonably okay day. So about 220 odd points up for the Dow Jones. So that was okay. As you can see, the Nasdaq itself, the blue line was flattish to marginally lower, but the Dow and the S&P did okay. So that's the first part of the equation. Mind you, risk assets and selective risk assets continue to rise and shine. Bitcoin, for example, is doing really well for itself. So that part of the equation, the risk on mode, continues. What about the global markets per se? The Asian screen has a tinge of flattish moves to itself. I wouldn't even read too much into either the red or the green. It just seems to be a fairly flattish line that we seem to be having. And the SGX Nifty will come up on your screen next. There's again, um, a flattish performance. So really nothing to take home from. The key is, can the market breadth improve? And by the way, much as people, let's get the MOV function up on the screen. Much as people would have thought that yesterday was a bad day, and frankly, the market breadth would suggest that 166 to 333. But it wasn't as terrible the second half of the trade as it was in the first half. And uh, I know a lot of people believe that the BSC circular was the linchpin. There was a key reason why the markets cracked. Um, I think the market used it as an excuse, if you will, or selective stocks may have fallen because of that. But it'd be crazy to think that in now such a broad market, a circular brought about this. I may be wrong, but I firmly believe that the circular was probably a mere excuse. I don't think that that had the power to bring down a bunch of names the way they have in the last couple of days. So some bit of correction was warranted. Maybe it has happened. Can it do more? Sure, it can. I mean, typically corrections don't end this way, but the last 12 months have been anything but typical, right? Every small correction has been bought into. It'll be interesting to see if this is turning out to be more of the same or no. So what's the trade setup like? I think the benign global moves may actually soothe the frayed nerves. When I spoke to local dealer desks yesterday, and in the evening I actually did that. I spoke to a lot of informed, well-placed local dealer desks, and they were still confident about select mid-cap names in metals, real estate, and sugar. Mind you, the conversation is that फिलहाल one side FI वाले stocks चल रहे हैं, but there's still activity in metals, real estate, and sugar names in the mid-cap end of the market. So it's something interesting to watch out for. There's amongst the data releases, aside of the results, the June IIP and the CPI data may be something that people would want to watch out for, especially the inflation print in India. I think there's a lot of fear about why, even if the global inflation doesn't really peak, could India inflation force the RBI's hands? And I think every print subsequently would be something that people will be watching out for. A fairly important day for results for large Nifty names. So Tata Steel, BPCL, Eicher, and Hero MotoCorp. And I think people will be keenly watching out for Tata Steel's numbers. After what everybody else has done, Tata Steel surely needs to do well, and I reckon they would. I think their commentary around what the European operations could deliver would be very, very keenly watched out for. Then at the broader end of the spectrum, NMDC very important. Ashok Leyland, and I think there were enough notes yesterday which were saying that the results will be weak is priced in, but the outlook is something that people should probably take heart from. So if indeed there's a dip because of the results, I think there was a BNK Securities note which said that buy that dip. Page Industries would be interesting from a consumption perspective, and I think the commentary from Bharat Forge very, very important. Mind you, last quarter when he spoke to me, Amit Kalyani had said he had kind of said that we apologize to shareholders for the delay that has come into the business uptick in Bharat Forge, but he believed very strongly that the momentum is on the upside for Bharat Forge. So it'll be interesting to see what that stock does in the session post the numbers. It was anyways up about 4% ahead of the numbers on the US infrastructure plan. Let's see if the numbers actually propel the stock further. So those are a few companies that you should keep an eye out for. What about the stocks that will come out with result that will react to numbers? Um, Yeah, okay. Yeah. So let's stick with this, and then I want to speak a little bit about the MSCI quarterly index review that hasn't happened. But first, the reopening trades to watch out for, and I've kind of chosen two or three specifically. Um, any restaurant stock, I mean, uh, firstly, actually, Phoenix Mills, since malls will now be allowed to remain open till 10 a.m. in Maharashtra. I think that's a very big move, simply because a lot of people were hoping that the malls could uh, really start doing well. So I think that is one key thing that everybody would be watching out for. That now, since open till 10 a.m., could it bring about a much needed spurt? Especially restaurants and any of the restaurant stocks, because restaurants too are allowed to stay open till 10 p.m. in Maharashtra, and that's a big thing, right? That's a big part of most hotel chains or restaurant chains' presence. And Wonderla Holidays, I think I saw yesterday that they will now open the theme parks in Karnataka. So again, not just restricted to Maharashtra, but Wonderla holidays would be interesting. 10 p.m. Keep in mind, they are allowed to be staying open till 10 p.m. So I correct my words. So that is one. The other thing to notice, just before we move on to the next set of stocks, is the MSCI rebalance. It hasn't happened. So there was a lot of expectation that the SRFs of the world and some of the others will get included. They are not included. Could they fall a bit? That is something you have to monitor. So I think the very small changes made. Couple of small changes made to the MSCI thing. So the expected didn't happen, the likes of Lotus Labs, etc. But Tata Steel and Havells, small weight increases. Maybe there could be some flows there. Okay, let's move on to the next set of stocks to monitor in the session today. Some result boys that all of us should be very keenly watching out for. So Praj, um, and it, you shouldn't compare a company like Praj quarter on quarter because it's a very seasonal business, and Q1 is typically a weak quarter. Q4 is a strong quarter, but because Q1 last year was so disrupted, I'm forced to compare it quarter on quarter. Not the prettiest of numbers if you look at it quarter on quarter. Revenues at 386 crores versus 567. EBITDA margins at 7.94 versus 13.2, and PAT 22.2 versus 52 crores. Now, keep in mind, if you just look at it compared to expectations, as Philip Capital's note said, that the numbers are better than anticipated due to better execution. This is the verdict from the first cut of Philip Capital. Now, keep in mind, in a seasonally weak quarter, Praj actually executed really well, which is why the top line number at 386 crores is is okay. It's actually not all that bad. But if you can go back to those numbers, the problem that I see with Praj's numbers is the margin number. EBITDA margins have collapsed to 7.94. Forget the 13.2 quarter on quarter comparison. Even on a normalized basis is slightly lower than what they did even in quarter three, which was about 11 and a half. Now, the problem, and I think we're going to talk to the Praj management, which will come tomorrow on Talking Point. But the question to them would be, or their certainty around what can happen to EBITDA margin and the cost absorption, because Praj doesn't have a pass through for the contracts. And therefore, if margins hurt for some more period of time, that could bring down the profitability for Praj. So that is something to watch out for. The order intake, by the way, was very good. So maybe yeah, the street takes heart from the fact that the order inflow and the order intake and the execution was so good. Um, I think the margin picture is a bit of a disappointment. Let's see which way the stock does. No clear answers there. Bata, the numbers were below estimates. Revenues down 55%. EBITDA loss at 31 crores versus a gain 112 crores. Net loss 69 crores versus PAT of 29 crores quarter on quarter. Uh, Again, we know that this was a lockdown quarter, so technically quarter on quarter doesn't make sense. But last quarter also was a lockdown one, so therefore YOY will anyways look good. So I didn't want to bring the wrong picture. I think the numbers were below estimates, but the operating performance was better because the gross margins improved both quarter on quarter and YOY. EBITDA, of course, is a loss, but gross margins were uh, showed an improvement both QOQ and YOY. And the management has said that since the ease in the lockdown, footfalls and retail outlets have started growing. Now, this is an obvious thing. I'm bringing it out to you, but it's an obvious thing. I mean, I went out for shoe shopping yesterday, so obviously, the more the shops will say that footfalls are improving. But let's wait and watch. I thought compared to expectations, because there was an opening up and because there's some bit of easing, maybe they could have delivered slightly better numbers. I reckon Bara could show a bit of a corrective move today. Bajaj Electricals was the other one that I wanted to highlight, and I'm just bringing the Morgan Stanley note out here because that kind of says what I want to say. They've, of course, maintained the overweight, but the target price has been cut a bit. They're saying that profitability for both FMEG and EPC businesses in quarter one was below expectations. But the management has guided to FMEG margins of 9 to 10% in FY22 and for the EPC business to be in the black in fourth quarter of FY22. I think in the note, they also say that build positions if there is a weakness. So technically, there will be weakness. When do you want to start building positions in Bajaj Electricals is purely your call. Please study the company a little bit before you go out and buy it. But yeah, there could be expected some weakness for Bajaj Electricals. Some other stocks based on results, based on brokerages, but largely based on results. So VIP, PAT or 2.5 crores versus there was a loss of about 3.8 crores quarter on quarter. Even YOY was a loss. They've turned into the black in a COVID impacted quarter through stringent cost control. I think this is a bit of a thumbs up to the management activity, and therefore a bit of a thumbs up to the numbers as well. Could react positively. Take Solutions for a stock which a lot of people are betting on that it will double, etc. So many people talk about it. I think it was a bit of a disappointment. EBIT was down, by the way. EBIT was down 41%. We don't have the word down here. It was down 41% quarter on quarter at 20 crores. So disappointing numbers from Take Solutions. Maybe the stock would react slightly negatively. New India Assurance, again, very poor numbers. I've done the YOY comparison here because, this business was probably still okay on a YOY basis last quarter, but the PAT was down 66%. Not the best of performances. Let's see, not a very liquid stock as well. Cadilla is interesting, and let's stick to that because brokerages were largely somber post a very tough quarter for Cadilla, COVID impacted quarter. Most brokerages have either maintained a very low target price, or CLSA, for example, has a target price of, I think, 640, but they've cut it to 640. Credit Suisse has a target price which is probably sub 400 or thereabouts. So most brokerages that I read were very somber on Cadilla post the quarter. So maybe it could have a slightly negative reaction. And Cummins, slightly better performance, revenues marginally ahead of estimates because both domestic and export sales improved. Nomura analysis is slightly negative on Cummins India. The numbers looked slightly okay. Let's wait and watch if that has a positive reaction. Timken India HDFC Mutual Fund bought about 5.5 lakh or 6 lakh shares, nearly 6 lakh shares at 1535. So it'll be an interesting stock to monitor. And SAIL would be very important. It's out of the F&O ban. A lot of people were watching out for when SAIL would get out of the F&O ban. Metals reacted very strongly yesterday. So even if it was in the F&O ban, it actually reacted very, very positively, about 6% up yesterday. Maybe there is more in store. So watch out for this one as well. Before we wrap up, I thought I wanted to leave everybody with a quote from Jesse Livermore. I'm not a preachy person typically, so I really can't really preach, but I thought this quote was interesting, so I'm just bringing this to you. He says that the game of speculation is the most uniformly fascinating game in the world. It's not a game for the stupid, the mentally lazy, the person of inferior emotional balance, not intelligence, emotional balance, or the get-rich-quick adventurer. They will die poor. This is coming from one of the finest minds in the trading and investing game. So you got to take on board. If your mental balance is somewhere around one of these, emotional balance or slightly lazy, maybe investing is a better bet for you, not trading. Viewers, keep in mind, a lot of you might be perturbed by what's happening in the mid cap and the small cap space. So what we're doing today is at 9:30, we're talking to two guys who are smart, who understand the trading game, who understand mid caps and small caps well. And at 9:30 a.m., we'll be talking to Ajay Srivastava and Gautam Duggar to try and understand from them what they believe people should do in the mid cap and the small cap space. So you might want to tune in for that. Thanks so much for tuning into the Trade Setup, though. Have a safe day ahead.